in a competitive industry with a late start, returns and size on a large base of 1 lakh crore, I think have been quite extraordinary. I just want few numbers, Sandeep Tandon. What is the total net inflow? I'm not talking about gross. Net inflow which Quant has on a monthly basis, and how much market share you currently have now?
So if you really look at, we get between 100 to 200 crores or sometimes even 300 crores on a gross basis. Okay. So that's the number we get on inflow. And even let's say talk about yesterday, we were on 200 odd crores. So I'll give you some numbers. So 200 plus something was a gross number as of yesterday. So this is what we are being getting for last, maybe for last 8-9 months. This has been our flow, which has increased. So it started with 10, 12, 20, and now we are 200, 300 sort of range. Sometimes we get even higher also, but average around 200 crores inflow, gross inflow, we do get.
Gross inflow daily, no, Sandeep? Because it cannot be a monthly number. I'm talking about the monthly
daily number. This is number.
This is the daily
20.
number, right?
Yeah.
Okay, that is.
So multiply by 20, you can get. Okay, 2000.
Saturday, Sunday, you don't work, so you don't add that back. Saturday, Sunday add. Excluded.
Yeah, so 2,000, 2,500 odd crores.
And how much is? And how much market share you have right now in terms of fresh inflows?
I think we get a very sizable. Okay, if you really look at last few months data, okay, we were one of the biggest player in terms of market share in small cap. We were getting as high as 50-60% also, mid cap also, small cap, techs also. So we have been gaining market share, and it's not only last few months. We have emerged as a top 3 or top 5 AUM gatherer and top 5 folio gatherer in last 3 years. So it has been consistent for last 3 years. We have emerged in that category.
The market view, Sandeep. We are staring at a situation where globally things are turning slightly volatile. Crude has suddenly fallen. Yields have suddenly come back, or the bond markets have rallied in favor of bond investors. And also US financials, I just looked at the data, US financials have started correcting. When this combination occurs, it means that the world is getting ready for an impact, so to speak. Should investors brace themselves for an impact?
So Nikunj, if you recollect our previous interaction also, right from July, we have been saying that the current quarter between July to September will be the most volatile quarter in the FY 2024. Okay. And when we saying that why should be volatile? Because we have been talking about cross asset, cross market volatility should spike, and the background of geopolitical volatility, currency volatility, which means world is not going to be stable in this period. And that's one of the precise reason in last 3 months, our portfolio, if you look at, is more skewed toward defensive side. And we still maintain that this cycle has still not ended. You have seen the choppiness of volatility, which is there. In the last 2 days, we have seen massive covering. Now futures are again sharply down. Oil has corrected significantly. So our view was that oil will correct. Our view is that gold will also correct sharply in the current month itself. So that's some data points. So we work on some of the macro data and the predictive analytic thesis, which was endorsing this sort of vulnerability or volatility will be there. And hence we like to play it safe. We are not saying that we are very negative on the market. Neither we are negative, nor we are complacent about market. We want to be playing safe. If some vulnerability aspect is there, we should not fall into that trap. Okay, that we have been very aggressive about the equity market, the way we build our portfolio, we manage our portfolio in last 4 years. We turned extremely cautious in September 2021 for a few months. And again, in July 2024, we have turned cautious. And that's based on our data analytics. This is not based on the gut feeling, or this is not based alone on the valuation has moved. Our IPOs have coming, a lot of narratives are getting built around that. We look at the combination of multiple factors. And since we run multivariates model and our data points are endorsing, you have to lie low. You don't have to be play on front foot all the time. And that's one thing what we are doing. We are playing on back foot, but we are playing with safety. See, the strength of the quant is all about how you manage risk. We always say we are in the business of risk management. Returns a byproduct. We have to manage our risk proper. And given the context, when we see vulnerability, in particularly in the developed market, we talked about US in the currency front or the commodities front, we would like to play safe. We don't have to be on front foot all the time.
So Sandeep, what is the trade for next 6 months? Is it growth because rate come down, inflation is down, so go back to growth, let's say banks, NBFCs, or just hide in defensive? Take a safety cover, so to speak, because things will be volatile. And if you hide in the comfort of FMCG and bit of pharma, bit of IT, you are better off.
So purely on what you call it defense side, I think defense is also is a definition which can keep on changing from time to time. And some point in time, let's say capital goods was very defensive, still defensive, but on relative basis, it has lost its relevance because of sheer grossly overvaluation. But if I look at the current context, let's say FMCG as a space which has been underperforming for a while, okay, that's a space we have built our exposure. Valuation was not cheap, but they started trading in the neglected territory, and hence that was the play. So is the case with pharma, and so is the case with insurance, and so is the case with some of the healthcare space. So these are the areas which we remain very constructive. And I'm saying that even sometimes you have to underperform a bit. It should be a part of a strategy, but let's play safe when we see data points are showcasing that things are going to be more volatile. So I like to play safe on through these sectors.
Okay, Sandeep, good to have you on the show as always. Thanks for joining in with your
Yeah, thanks for
thoughts.
inviting us.